What is going on, investors? Hopefully you guys are doing well out there. You know it must be earnings season. We're up at 6 a.m. over here at the Investor Channel. We haven't showered, we haven't eaten, because we've got to take a look at the Q3 earnings that just came across from Taiwan Semiconductor Manufacturing Company, otherwise known as TSM. That's the ticker symbol. Sometimes it's referred to TSMC. Over the last year, this stock, like a lot of stocks, down big, down 41%. Year to date, down 50%. This one's been walloped. Oh my goodness, we've got a PE ratio forward of just 10 on this one. Your dividend yield is creeping closer to about 3%. You've got a market cap of about $323 billion. When we go through these numbers, we'll still see a company with absolutely fantastic growth rate, a company with a dominant market position. We'll jump into the financials, take a look at the balance sheet, the profits, the cash flows, everything that you love with this company. And then you come over here to the stock chart and it has gotten super ugly. So we'll talk about that as well. Let's jump right into that Q3 numbers. We had revenue coming in at $20.23 billion. That was 36% growth year over year. It did beat expectations by about $1.14 billion. We'll come over here to the expectations. Wall Street was expecting about $19 billion of revenue. The high-end estimate out of 23 analysts on Wall Street coming in at $19.75 billion. So this $20.23 billion number, certainly very, very strong. Gross margins were fantastic. Operating margins, everything across the board looked fantastic with this company. Now, we also got guidance for the upcoming fourth quarter as well for TSM. Revenues expected to be about between 19.9 and 20.7. So there's a chance we see a little bit of a sequential fall on those revenues, going from 20 maybe down to about 19.9. I did want to show you the analyst estimates was for $19.48 billion in the fourth quarter. Again, this is for the upcoming quarter that we just got guidance on. We'll go through the third quarter here in a second, take a look at that from a financial perspective. But look, the upcoming quarter is still going to show you about 23% growth. In fact, the high-end Wall Street analyst estimate was for 20.5. So if this company comes close or even exceeds the $20.7 billion worth of revenue that they're thinking that could come down the pike down in Q4, well, they'll certainly come over expectations again. And you've also got another quarter of over 20% growth. But that's not the story that a lot of investors are looking at today, and probably for good reason as well. A lot of investors are looking out into Q1, Q2, really all of 2023, and there's a lot of mystery about what's going on. Now, analysts are expecting those fantastic 20, 30% growth rates at TSM and for all chip makers across the market to decline to very slow revenue growth for basically all of 2023. Expected to grow just 4.7%, then 2.5%, then back up to 7%, and then somehow we're going to go back into double digits towards the back half of next year. Certainly, if you believe that is the story that will likely play out, I tell you what, a company like this, if you're comfortable with the China risk, if you're comfortable with the fact that the United States is starting to sanction China when it comes to these chips, and certainly going to impact TSM as their customers like NVIDIA, AMD, and others might not be able to sell into that China market as easily as they had in the past. We'll see what happens. A lot to discuss with this company. Now, they also discuss the fact that they're going to actually cut their capital expenditures, otherwise known as CapEx, for 2022 to around $36 billion. That's pretty significant because the company said in July they were likely to spend $40 billion to $44 billion for the upcoming fiscal year. So they've actually really slashed their CapEx budget. Now, it's for two reasons. Number one is the fact that capacity optimism, otherwise known as demand for their products, certainly has started to wane as NVIDIA's overstocked on inventory. So is AMD, Intel, all down the line. We're seeing lower demand for chips from the PC space, but also potentially for the server space, obviously for gaming and crypto mining. A lot of that air has been let out of the balloon. So they're pulling back there, but they're also seeing challenges and getting tools delivered. So chip making obviously requires some very specialized tools, some very expensive tools, and those are being delayed as well, according to management over at TSM on the conference call. Now, let's jump over these financials because I think you're going to absolutely fall in love with these. We've got tons of cash over at this company, over $40.8 billion worth of cash, or nearly $40.8 billion worth of cash. The company carries a ton of property, plant, and equipment, and if you've been following this space, you know that this is very valuable property, plant, and equipment, because one of the competitive advantages that this company has is it doesn't have a lot of competitors, and their competitors like Intel and others that are trying to build up these fabs, they're still years away, maybe even a decade away from really scaling up to anywhere close to where TSM is. And obviously this company is going to be able to continue to scale up during that time frame as well. This company has nearly $76 billion worth of property, plant, and equipment, and to balance that off, they have very few liabilities, just about $60 billion in liabilities, to be balanced off by over $63 billion worth of total current assets, and total assets period is over $146 billion. If there wasn't that China risk on this one, I probably would be piling into a stock like this over the next couple of months, because when we come over here to the profit and loss statement, it is just gorgeous. You had that $20.2 billion worth of revenue. We talked about how that was 36% growth year over year, and then we're expected to do in that range in the fourth quarter. Now, obviously, analysts are expecting this to drop down under $19 billion, or actually under $18 billion for the next couple of quarters, to reaccelerate back into that $20 billion range. The reason why that's important is the fact that they have cost of revenue of just $8 billion. Now, there's probably some investors that are concerned that as the NVIDIAs have to pull back, as the AMDs have to pull back, and all the customers have to kind of pull back on the demand that they're seeing, well, then TSM might have to pull back on their gross margins. No evidence of that yet, but that is one of the very attractive things about this company. Off of $20.2 billion worth of revenue, they had gross profit of $12.2 billion. They have very few operating expenses, a total operating expense coming in at just $1.9 billion. So you take $20.2 billion worth of revenue, you minus off about $8 billion worth of cost, you get $12.2 billion worth of gross profit. You minus off another 1.9, we'll call that nearly $2 billion worth of operating expenses, and then you get to the all-important income from operations at $10.2 billion. That is like 50%, in fact, in excess of 50% operating margins. So for every dollar in revenue, they're clearing nearly 50 cents in profit. This is one of the most impressive things that you'll see. You don't see this very often when you analyze these financials. You pull all the way down to net income after they pay everything, and it paints basically the same story. $9.2 billion worth of net income. This company prints nearly 50% of their revenue all the way down to net income. You don't see this very often, and if there wasn't all these other risks in the market, this certainly could be easily a top 10 holding for most investors, and for some investors that are looking for that type of risk that this stock does have with that geopolitical tensions that you have going on with China and kind of the rest of the world and the rest of the West. This could be a top 5 holding with these types of financials. Now, for the 9-month ended, we're looking at cash flows here. You see this company generated $38 billion of net cash provided by those operating activities. Now, we talked at the jump on the balance sheet. They spend a boatload on that property, plant, and equipment. $25 billion over the last 9 months on that alone. So that's going to chew up a lot of that cash flow, a lot of those profits, but it still leaves plenty for this company to then pay dividends. They paid about $7.3 billion worth of dividends over the last couple of months, or the last 9 months to be specific. But given this company's profit margins and their strong revenue, this is one of the better financial stocks that we look at outside of the Apples and the Microsofts and the Googles, to be quite frank with everybody. Now, let's come over here and look at this from a technical perspective. It's looking like a lot of stocks. We're starting to test, and in this case, even break through what we're talking about decade-long uptrends that we're seeing. Since the depths of the great financial crisis back in 2008, this stock has been on an elevator shaft upwards. Now, obviously, like a lot of stocks, took a big, gigantic, probably overreaction type jump after after the March of 2020 lows, and it just skyrocketed from about $50 per share all the way up over to nearly $150 per share. That certainly wasn't warranted. Now, I am on a weekly view. I'm starting to look at stocks from a weekly view to make myself maybe feel a little bit better about these things, but this downward channel is still intact, and it's still intact until it's not. I still think you're looking at these companies, if you have a longer term perspective, 5, 6, 7-year type perspective, maybe even 10 years for some of you, well, a stock like this can be accumulated at these times, but understand the momentum is completely out of these names, and there's the potential for much deeper drops on this one. But historically, this period over the last more than a decade has been a wonderful buying opportunity when it's pulled back to this weekly time frame. I'm sure we could switch this over to a monthly view, paints an identical story as well. It's just been on this elevator shaft upward. Now, obviously, those things can break. You do have some support down here at about $56 per share. It's about $9 lower. There's further support down here at about $49 per share. Now we're getting nearly $20 lower, and there's probably kind of this rock bottom price down here at $34. That's still another 30 or 40% decline on this one. We're already, from the highs this stock made back in January, we're already down 56% on this one. If we pull back a little bit more to this area of support, that's a nearly 60% drop. You have another area of support here at about 68% decline, and I think your rock bottom is from the highs, nearly 75%. I don't know if that provides any comfort, because if this stock continues to drop, you could have potentially another 40% decline on this one, and at least another 20% decline. That's why if you're inching into these stocks, which I actually think is a good idea, you want to do it very, very slowly, one step at a time. I would not use margin in this environment. There's certainly option strategies that could give you a little bit of margin for safety as well. What the premiums are in this environment is up for you to decide, but TSM is just a wonderful company from a financial perspective, from a demand perspective going forward, a little bit shaky from a regulatory perspective, very shaky from a geopolitical perspective, extremely shaky, but you've got a very reasonable price to earnings, price to sales on this type of stock, given its growth rate, given its profitability, given its balance sheet is about as good as it gets. In the shorter term, investors are extremely nervous, but in the longer term, it's going to be stocks like this that have epic rallies over a short period of time as the market starts to get greedy once again. Hopefully you guys enjoyed today's video. Lots more videos coming over the next month as earnings season has officially begun. Hope you guys have a wonderful day out there. Good luck with your investments.